Good morning, welcome to IG's early morning call. Midweek trading session today, Wednesday, 23rd of August. Let's take a look at the headlines as we wait what looks like a slightly stronger start to the European equity markets on this Wednesday. And we're also monitoring what's happening with the US dollar. It's a day of PMI data today across major Western economies. And we are also, of course, awaiting the start of the central bankers meeting in Wyoming starting tomorrow. The Jackson Hole Symposium gets underway, and that I think will be the focus for the foreign exchange markets this week. NVIDIA, well, yesterday we saw another all-time record high intraday yesterday. Then came a drop down 2 3/4%. All this ahead of earnings after the bell this evening. Could well be interesting to watch out for in terms of the company's move into and domination of the artificial intelligence sector. And we're monitoring base metals this morning. It seems to be a good day on the markets for many base metals. We've got whole raft of them up today. Iron ore, one of the better ones in the performance on the session, and the Chinese markets this morning up at a 4.5-month high. As ever, let's take a look at what's happening in volatility. As I'll show you in just a minute, we've got an expected rise across the equity markets in Europe on the session this morning. And as a result of this, we got more downside coming through for volatility. Now, yesterday, I drew this pattern here, which when it really starts to hold, which it actually hasn't, I'll explain why in just a minute, it will potentially develop on the downside. This is a bearish wedge pattern. You need to have 3 touches on both sides. And technically, we haven't had 3 touches on the upside because there was a day when we didn't have the top of the candle meet that line. But nonetheless, it is a sort of a shadow, if you like, of a bearish wedge pattern. And this resolves on the downside. What you would normally get, you'd measure the height of where it has touched both sides. You measure the height, and the projection would then take you down. Down because it's a wedge shape on the upside, which means it's ultimately going to resolve on the downside. So ultimately, it should, technically speaking, break this rising line of support at some point. So it's not unexpected that we should see a drop in volatility at this point of the technical cycle. But fundamentally, there's a good reason to see volatility down because we've got what looks like to be a strong start on the equity markets today. London has been an underperformer in the last few days across Europe and still is, to a degree, 72.89. We are expecting a stronger start in the London markets as we see this market take an advantage of whatever money is out there. There are a couple of stories, or one story in particular, that could see some upside. GlaxoSmithKline. I'll take a look at that in just a minute. Third day in a row of gains for the German DAX. Relatively strong day yesterday on the German markets, despite the fact we're still getting evidence that the German economy is in a little bit of trouble. 15,753, we're marching higher for a third day in a row on the German DAX. French markets as well. Relatively strong intraday yesterday, then came a pullback. It was a green candle, as you can see here, for a third day in a row, 24-hour markets. And we're building on that today, so strong start expected on the French session as well. Quick update on what's been happening overnight on the Asia markets. Asia has been mixed overall. We've got some of the markets on the way down. You can see here all 3 of these that we're showing you at the moment. We've got the Nifty 50 on the way down. We've got the Singapore markets on the way down today. Not by a big margin, but just to show you there is a mixed picture out there. The Nikkei 225 ending the session at 0.4%. Hang Seng Stock Index still has around about 90 minutes. The trading day left there to go today. We're currently trading up. S&P ASX 200 ending with a gain as well. US, let's take a look at what happened last night on Wall Street. Mixed bag, Dow and the S&P on the way down, but the Nasdaq Composite showing a day of gains. Not a particularly large day of gains. And you can see, in fact, you look at the chart, we had been higher than that intraday yesterday before a pullback, but we're building on that. We got NVIDIA out after the bell tonight, along with Peloton, 2 all-session stocks, which I'll take a look at the next 10 minutes or so. Just take a look at how the Nasdaq could perform today. Both those stocks are trading all sessions, which means they start at 9 o'clock this morning. But that gives you an insight into what's likely to happen for the Nasdaq. Just a quick update on the Dow, and you can see the drop that we saw yesterday. And we are once again looking possibly to challenge this rising line of support that we've got since the lows we had back on the 13th of October. Despite the fact the Dow was up almost 25% at one point, that was the 27th of July. Since then, there's been this slide around and dropping below this prior line of support, now resistance just above where we are. So interesting times for the Dow, but money still going into some of those technology stocks as we see tech being the outperformer. I want to take a look at what's happening with the US dollar now, because we've got a couple of things that are happening. First of all is, for many Western currencies, is the PMI data that I'll take a look at in just a minute. But I want to focus in on what's happening with the dollar, because we've got this Wyoming central bank meeting starting tomorrow, where we have the Jackson Hole Symposium, edging higher against the basket of currencies. You can see, if you look at this chart here, intraday yesterday, we did see it peak, albeit a fraction above the highs that we had on the 18th of August. It was just a couple of ticks higher, which actually took us up to levels there not seen since the 8th of June this year for the dollar. The index is sitting just shy of the 2-month high at 103.68 earlier today, reaching last week worries over China's economy and bets that US interest rates will stay higher for longer, lifting the greenback. But I think that today we will have the real focus on what's happening with the PMI data for this month of August. We already got data from Australia, where manufacturing PMI remained below 50 for a sixth straight month. Anything below 50 means contraction. In Japan, manufacturing activity remained in contraction as well. Out of the last 10 months, the index was above 50 just once in Japan. We are getting some evidence that Japan is picking up. There's some good inflation data coming through, and there's better than expected growth data as well recently in Japan. But you can see here manufacturing activity remaining resolutely below 50 in Japan. Two indicators will be of interest here in Europe. Let's take a look at those. German manufacturing activity has been in contraction for the past 16 months and is now at its lowest since May 2020. Economists expect it to degrade further today to 38.7 after 38.8 in the month of July. And you can see then an hour later here in the UK at 9:30 this morning, we get the UK S&P Global SIPS manufacturing PMI data forecast to fall to 45, 5 points below that watershed contraction expansion point. Last month it fell to 45.3, its lowest level in 3 years. So let's take a look at the euro. Euro down heavily in yesterday's session, and indeed yesterday touched a total retracement on this fib here from the lows we had back on the 6th of July. So you can see that hitting that yesterday and not too far away at the moment at 108.52. You get a candle close below the 108.34. You then got the 200-day moving average just rising almost to meet that. That kicks in at 108, the round number. And then below there, you've got this line of support down here at 106.53. So I think if we do see the dollar strengthen, that is the euro lose ground, that is the next line of support to watch out for. And if I could see a candle close below the 200-day moving average, I'd feel confident then using that line of support at 106.53 as my price target to go for on a short trade for euro dollar. Just a quick update on what's happening in sterling ahead of the SIPS manufacturing service data out at 9:30 this morning. 127.43, been flatlining in the last few days. But if anything, I think sterling has been one of the better performers against what is otherwise a stronger US dollar. Got the Bank of England, of course, raising interest rates. 3 p.m. this afternoon in the US, we get in the EU, we get Eurozone consumer confidence flash data. Economists expecting the index there to rise to a negative 14.3 in August from a negative 15.1 the previous month. Also at 3 o'clock today, US new home sales forecast to fall by 1.6% in July compared to June. And again, we'll be looking at the dollar for that. I'll be on the IG platform at 1:30 this afternoon for Beat Street, taking a look ahead to some of the news on Wall Street that could move the markets on the day ahead. What I want to do now is to go back to the charts. I'm going to show you a chart that I've just drawn up in the last half hour because we've got some breaking news for GSK, the former GlaxoSmithKline. The stock will open at 13.57. There is some news this morning in China. The new Shingrix data has demonstrated 100% vaccine efficacy in the prevention of shingles in adults aged 50 and over in China. Apparently, it's quite prevalent in China. No cases of shingles, which is also called herpes zoster, reported amongst the participants who received Shingrix in the randomized clinical trial. The data comes from the first efficacy trial of Shingrix in China, but certainly looks to be positive. Do we get a little bit of a lift at the start today for GSK? Well, certainly when you get positive news like this coming through on drug trials, quite often you do get a little bit of an uplift. 13.57 is where we're going to start. If you're long on this, your stop goes below the next line down here, which is the 13.40 level. So about 13.35 would be a good place, your stop loss, if you are long on GlaxoSmithKline, or should I say GSK, ahead of the open, which starts at 13.57. This is the trial's safety and efficacy data. So it is still going through trials, but nonetheless, it shows 100% success. Now, let's take a look at the big one today. NVIDIA coming after the bell tonight. The question is, can NVIDIA beat the earnings expectations for a third quarter in a row? You remember last month, it was an absolutely, last quarter, absolutely stunning number that we got because of the entry and the capitalization opportunities the company's seeing in AI. One of Wall Street's favorites since it's been surfing the AI wave ahead of its competitors. Earnings per share expected to come in at $2.07 on $11.07 billion in revenue. To understand how artificial intelligence or AI is a game changer for NVIDIA, you just need to have a look at its quarterly report from this time last year. then posted earnings of 58 cents per share, roughly a quarter of what it's forecast to post tonight. And revenue came in at 5.93 billion. So you can see the company has grown enormously since then. And you've only got to look at the chart to realize what's been happening. Since the beginning of this year, the stock is up 242.55% as at the intraday trade that we saw yesterday. The US listed stock had its share price boosted again this week after Morgan Stanley analysts late last week, in fact, said that its stock is the firm's top pick following the most recent earnings report. The company is now valued at over $1 trillion, and its shares are up nearly 200%, well, more than 200% so far this year. 458.05 is where the stock will open at 9 o'clock UK time this morning, and you can trade this after the bell when the stock is could well react to the earnings out. Yesterday, we saw a flip over of the MACD. That is where the MACD line goes over the signal line, which indicates momentum is once again picking up on the upside. How much more upside is there to go? And I guess we're going to find out tonight just to see just what the company is now doing. So the company will offer investors more insight into financial health with its Q2 results after the bell this evening. Three other stocks to watch today after the bell tonight as well, but kicked into the shadows somewhat by NVIDIA. Snowflake, expectations there of earnings per share at 10 cents, revenues of $622 million. Peloton Interactive, expectations there, loss per share 40 cents on revenues of 641. And Foot Locker, out before the bell today, earnings of 4 cents a share expected on revenues of 1.88 billion. I want to show you this chart. This is Peloton. It's an all-session stock, so it's worth looking at this evening in terms of a trading opportunity. These two boxes here represent the move in the blue box. First of all, the 857% uplift that we saw in Peloton stock from the just before COVID lockdown started and people realized they couldn't go to the gym. They were ordering all these machines to their front rooms and taking part in all the fitness regimes that the company had to offer, its software and so forth. And since the highs we had when the stock was at $171, since then we've seen people return the machines, to sell them. Second-hand market fell out of bed. There was no one dialing into the software because everybody wanted to go into the gyms again. There is still a business model here, but you can see it's been bumping along the bottom recently. That drop from the highs that we had where that stock was up 857%, since then we've seen a 96% loss in value. And since then, it really hasn't changed an awful lot. The highs that we saw recently have been 996, which actually coincides with the 200-day moving average you can see has been capped out, where there's met some sort of resistance there. Since the last one was at the highs that we saw back on the 1st of August, it's not been a particularly good month. 3 days in a row of gains. This stock is currently trading, or will open at 7:13 at 9 o'clock this morning, UK time. All sessions on the IG platform. And you can trade this after the bell this evening when it produces those earnings. Let's take a look at the commodity markets. The highlight there, definitely base metals. I want to take a look, though, first of all, at what's happening in the oil markets and wind the clock back yesterday evening to the API data that we saw. 2.4 million barrel drawdown in crude oil stocks late yesterday. Gasoline inventories falling 150,000 barrels. Distillates rising, though. But the net effect of all this, we didn't really have an awful lot of move, to be honest with you, for the price of oil. Today is the third day in a row of losses. Yesterday was a down day at 79.53, despite that drawdown in oil. I think part of this is concerns about the outlook and some of the areas of the world where there had been expected to see some really robust demand. But in fact, that being said, yesterday we saw BHP come through with earnings, which suggested that some of the areas of base metals are going to be doing well. And China is behind this motor, apparently, according to BHP. Yesterday, we saw a big move up in the price of iron ore. Yesterday, trading at levels not seen since the 7th of April this year. And again today, we're up again on the daily exchange in China, waiting the start of today's London markets for base metals. It's not just iron ore, copper. In fact, now copper, I've now wiped out this pattern here, which I had, where we had a projection of something like around about 8,000. That was my price target. It managed to get down all the way down to the low point at 81.20 before the recent rise. So I've now been stopped out on that. Any profits you might have bagged on that, not massive, but nonetheless, it would have been a profit. And we're now on the way up, and we've gone past this pattern, this head and shoulders pattern we got here. So it's copper, iron ore, nickel on the way up as well today. Currently trading up 2.36%. And aluminium, one of the poorer performers today, but yesterday was quite a good day in terms of the move on the market. Currently trading at 21.89, up a further 0.4%. So Reuters is attributing this move up in base metals to what's been happening in China. Just a quick update as well on what's happening with the price of gold. We're up for the fourth day in a row, and we're in fact actually pretty much the top of the candle here. No sellers at 1904, back up above the 1900 level, but we're coming up against the 200-day moving average, the red line just above where we are. That's it. 14 minutes before the start of today's European session. Still looking for gains across the board on the European markets, but I think possibly London in amongst the mix of the main markets across Europe, looking for gains at the start of today's trade. I'll be looking out at the beginning of today's session for the likes of GSK, which has come through with that good data on the trial of its shingles drug in China. We're back at 10:30 with Charting the Market.